You do not need to wait for the 1 hour time frame, the 4 hour time frame for a liquidity sweep. You can simply use the 1 minute time frame to find your liquidity sweeps. As you can see right here, we have swept this internal liquidity. Therefore, we can now look for short positions. We do not need to go for the 1 hour time frame and wait for liquidity to be swept all the way up here. We can simply wait for internal liquidity to be swept before looking for a move in the opposite direction. As you can see, we have this 1 minute bullish fair value gap. Now, ICT traders would be longing this bullish fair value gap, but I actually go short from bullish fair value gaps, and the way I do that is I wait for them to be inversed. As you can see right here, we get a candle close below this bullish fair value gap. Therefore, I'll enter into a short position here. My stop loss would be a candle close back above this fair value gap, and my take profit would be these relative equal lows down here. This is the 80% win rate day trading model that I trade almost every single day. You will not be able to use fair value gaps normally after you watch this video. As you can see, we are currently in a 2-minute bearish fair value gap. As well as that, we are also reacting from this big blue bullish fair value gap. Now, instead of looking to short from bearish fair value gaps like this that most ICT traders have taught, what you should actually do is use fair value gaps as inversion fair value gaps. Now, all that means is you wait for a candle close above this fair value gap, exactly like this. As you can see, the body has closed above this fair value gap. Therefore, I will now enter into a long position because I can expect that price action wants to take some sort of buy side liquidity. And as you see right here, we have these relative equal highs that are an extremely strong draw on liquidity. And as you can see, these relative equal highs have been smashed, and this was a perfect take profit. Now, this model has over an 80% win rate. If you want to learn my exact day trading strategy, you could have caught this 200-point move if you listened to what I said about price action today. Now, as you can see, we have a bearish SMT with ES. As well as that, we have this nice bullish fair value gap that has been created. Instead of taking long positions from bullish fair value gaps, you should only look to take short positions from bullish fair value gaps. And the way that you do that is you wait for the fair value gap to be disrespected and have a candle close below it. As you can see on our next candle, we get a candle close below this inversion fair value gap. Therefore, we will enter into a short position here. Our stop loss will go if we get a candle close back above the fair value gap, and then our first take profit will simply be internal liquidity that is resting right here, and then our second take profit will be all the way down here, these data lows. Now, the reason I chose this is because it is a very strong draw on liquidity. As you can see, we have this low created at 8:30, which was a news candle. And if we play at the price action, this was clearly the draw on liquidity.